SuperReturn International underway in Berlin, known as one of the world's largest private equity events. Our own Leslie Picker joins us there live with a special guest. So from Washington to New York to Berlin, Leslie.
Hey, Andrew, good morning to you. Good afternoon to you, as it is afternoon here. Orlando Bravo, managing partner of Thoma Bravo. Really appreciate you taking the time out of the conference to sit down with us today. Let's start on enterprise software. That is your bread and butter. And in recent weeks, there's been a reset in valuations for a number of publicly traded enterprise software names. Salesforce, Workday, Adobe, Snowflake, others reporting their quarterly results that disappointed investors. A lot of people have said that's because of this AI revolution, and it's taking capital spend away from enterprise software. And I'm curious what your take is there.
Well, Leslie, first of all, it's great to see you. This conference is unbelievable, isn't it? It's sold out. We can talk about private equity, and the environment here is very different than the deal-making environment. But really, for your viewers, I love the distinction you made. We're going to talk about enterprise software, not the consumer. The software that is sold into businesses. And you mentioned some great reports of companies that disappointed. In our view, and we own $25 billion of revenue coming from enterprise software companies, that is not budgets being taken away by corporations for AI budgets. In fact, today, corporations don't have Gen AI budgets. That is one of the issues. There's a lot of interest in that, but that is one of the issues. Now, let's look at valuations for a second. The companies that you mentioned are the greatest. Right there in the top 30 of the most profitable, most important software companies in the world. Their growth has come in. There are some reasons why their growth has come in. There's a challenge with selling products by the user. Investors have to be very careful now in software for companies that price their products by the seat or by the user instead of other means, because there could be a lot less users, or you get pressure on growth. I think we saw that in some of those reports. But overall, for companies that are growing roughly 10% a year, and some of the ones you mentioned are in that category, a 20 PE multiple is a very reasonable valuation for those companies. We believe many of those great assets are fairly valued today. Now, I want to add one thing. 85% of the software world, if you look at $10 trillion of market cap in software, about 1,000 companies. Apart from those top 20 or 30, the rest of the industry doesn't make any money. And as a result, they have to trade on arbitrary multiples of revenue that investors for some reason give them. Even though the bubble has come off of that, and those companies are trading at roughly 5 times revenue, that's the segment of the market that in our view is grossly overvalued, because those companies will not get profitable without transformative change.
But for the rest of the crop that you described in terms of being fairly valued in the enterprise software space, some of those that have seen their valuations come down in recent weeks, is that a buying opportunity for you? Does this whole notion of AI versus enterprise software change your investing thesis at all?
It is a selling opportunity. Large technology buyers need to buy great software companies that have scale, that have market leadership in their segments, and that have profitability to keep building their businesses. And whenever growth slows in the environment, there's also a bit of a macro slowdown that has been going on since the second quarter of 2022. They look to buy great assets. And if you look at us in the last 18 months, that's where all of our sales came from. The sales of our large assets to even larger technology and non-technology buyers in the industry.
So you're a seller in this environment more than a buyer, you would say?
We are always buying and we're always selling. See, here's the thing. We don't buy the index, we don't sell the index. And we certainly cannot time the market. We buy 4 to 5 companies a year and we sell 4 to 5 companies a year. And we look to see what's right in both of those situations.
So let's talk about AI then and how it fits into your overall strategy. As I mentioned, enterprise software, your core focus largely. Is AI going to be a bigger part of that? And as you're looking for capital opportunities to deploy capital, how important is it that there is an AI component in the assets that you're looking at?
It's a must. And I'll give you this one-liner. Gen AI will be transformative to enterprise software. We know and we dream about how it's going to be transformative for our lives and for the consumer. But for businesses, it'll be transformative, and there's a simple reason for that. If you look at the history of enterprise software, ending in about 2010, enterprise software was very limited because it was on-premise. It was hard to buy, it was hard to implement, and it was even harder to use. Starting with software as a service, software became easier to buy, easier to use, so it spread across organizations. Now with Gen AI, individuals, theoretically all the workers at a company, can communicate with your system and your product in a human way, using natural language. And many of our companies have released Gen AI products within their portfolios.